Good morning. Happy Monday. Hope it's happy for you. Long it isn't, but we said it was coming. I'm looking for the button, McGraw. I'm a little slow in the brain this morning. All right. All right. So last week, it just refused to go down in a significant way until the latter part of the week. It was pretty wild. I think we'd all agree. That rally on that day. And, I said it because that was just the history of what was going on. What I said was, we've seen these big rally days fall apart again. It just seemed unbelievable. It seemed unbelievable, but of course it was believable in the moment. It went up with a vengeance and then fell apart again. So we got the nasty down day that followed a big up day with an even bigger down day. And so down it went. Friday, you see the S&P's kind of held low. And so it's down here. It's not like crashing here. That's kind of good and bad, meaning it's not that far breaking the low where it can't retrace back up again, especially, at the open. You can see it's stabilizing over here, which opens up the opportunity for the credit spreads anyway, as I see it, in both directions. Because I just don't, we all trade based on beliefs, and then we see if our beliefs come true. That's the bottom line. However we get there by looking at charts and multiple time frames and market internals and so on. So I have a belief that there's no way the S&Ps are going to get back up above this consolidation today. And are they going to get all the way down here? I don't think so. They got to get through 4,000. There's nothing there except a whole number, but I think they could hit 4,000 and go under it a bit. Support is further down here in this relatively wide area, which is ultimately where I think, just like whether we're looking at a 5-minute chart, an hourly chart, or a weekly chart, where price is going to stop going down. Well, we look at an area of support. And when we look at an area of support, will it be kind of like a pinpoint area, which we would refer to as a pivot, like this, right, where it spikes down and spikes back up again? Or will it be a wider, relatively whippy congestion area, which is what this is? So whether it stops at the top, which I kind of doubt, just because of the bearishness of what's going on here right now, and we could get into more esoteric type of analysis, and I could do it this way, or I can do it this way, where you measure a move and where it consolidated a bit and then continued lower. And I don't know why this works, but it does. It usually ends up at an area of price support. And this puts it down here at around 3,600. And this one puts it at about 3,800. So I think, just based on looking to the left, taking this kind of a measured move kind of thing from these two rollovers and down and rollover and down, somewhere in between here, I think ultimately is where it ends up, and then starts a rebuilding process. We'll see what things look like. 39.25 for downside. I think it's a no-brainer. At 80 cents by a buck, what I see right now. So I think anything down 3,900 or below should be safe. Right? So 39.25, sure. On the upside, seeing this continues to go up. What was I looking before? It's probably 31.90 is not 80 cents, 85 by $1. You can go 81.90, 70 by 80. So as this goes up, or you want to do whatever, just thinking, can this get back above here? I don't think so. That'd be, and the thing is, you've got, so let's just mark that off. All right. And it's got to be red. Throw the red on there. Before it hits the ultimate pain, you're going to have a lot more information. 4,200. It'll probably, it's 8, yeah, 55 by 70. Yeah. And I mean, if this continues to grind up at the open, sure. I mean, this market, in the letter over the weekend, I talked about the price action. I used the word retarded over and above schizophrenic. But I mean, that would be retarded after this to come, all the way up there today. But, we make our assessments based on what we see and believe. So I don't think it'll go up there. All right, let's look at SPY. Just to see the gap. So it was down at 403. And a little bit. And, gapping down below the pivots. So now what do you do with that? Right? As a gap trade type of thing. So you look at these lines here, and it's a mess because it's close together. But look at those lows, 405, 406. That's where it's at. This is interesting because when you get a gap down, and it's not a significant gap down, and then you see pre-market, it starts to rally up. As it reaches the bottom of these bars here, right, into this area is where it usually rolls over. So maybe it gets a little bit further. So the way I do this here, like, it doesn't matter whether it's SPY or stock. It's just factory work. So let's say it gap down here, which is not a significant gap. And then what you look at is what's to the left, these areas right here, as to where the short zone is. And so we're getting this pre-market grind up. And so I guess it's already about there. And so you look at this, and you look at your 24-hour chart, and of course you look at your day chart, and then look for a topping tail or, a breakout failure or whatever. But somewhere in these areas on what a bearish gap is where it should come down to, and then so keep an eye on that. And of course, ideally it doesn't get back up to the pivot high because it's weak, right? It's in a downtrend. You got this 180 reversal there, all bearish stuff going on here. If it comes all the way back up there, it's like, what's going on here? Another crazy day. So, excuse me. Move that up. And the Dow has been stronger. It's now under this support. Last week we talked about this big rounding top. I think we get a close below this 4,200, and we could really see a downdraft down to 30,000. I mean, this is really bearish stuff that's going on here. I mean, all the inflation stuff and all that other stuff that's going on, but just like we're pattern traders and we see this, and it already broke here. And so that was the retest. It already made the break. This is just, okay, will it break the next level? And we've got a very large rounding top. And so to say it's going to stop at 30,000 at that pivot, and that would be all, I don't know, but it's a point to stop at. That's what I'm saying, McGraw. It's like it already broke here, right? So, and let me just clean this up because it's getting messy. We already got the break. Right. So whatever you want to call it, whatever kind of a neckline or wherever you're drawing from or whatever, this was a significant break, right? Because it went under all these lows. And then you got a deep, this is where I was like, is this for real? And then you got the rollover, and here we are back down here. And you got that topping tail over there. So it opens up the door to avoid, right? 30,000, maybe more. We'll see. We don't want to get too far ahead of ourselves. IM is one of the most bearish charts I've ever seen. Just to have, a year-long base and a breakout and a failure. I mean, I just got this 180 here because of the high open interest in bearish bets. But as you know, as well or better than me, that could fuel the move down here. in part. So, there's an open gap down here on a weekly chart. Ultimately, it could be headed, all the way down there. So keep an eye on that, Okay. And there's your futures, breaking down. There's nothing to stop it. It's kind of grinding higher for the moment. Bitcoin going down. We talked about the correlation and this breakdown here. I thought, when this was breaking, it could get down to 30,000, but, it made this retest and it rallied up to 50 and now, 30, just based on this correlation. I think it can go below that. And that's why I got this line at 20,000, but let's see what it does at 30,000 and see if it really bounces from there. So, we've got to use these intermarket relationships to our advantage to, we have a bias based on one chart. We look at something else like Bitcoin, and if we see Bitcoin roaring off at 30,000 in a very bullish way, and maybe we see the volatility index collapsing, this more bearish view of things going a lot lower, we need to reevaluate. If we don't reevaluate, that's why people get destroyed. And, I mentioned in the green room the other day, this interview that, what's his name? Yeah, big hedge fund manager. Anyway, it was on TED. I think it was on TED where DL, thank you, Fabio. And so here's the guy running one of the biggest, if not the biggest hedge fund in the world. And one of the things he talks about was in the 70s, having the belief that there was going to be a depression, and he bet it all on it and went broke. And he talks about having a choice. Do I go to work for somebody? Do I continue with my beliefs and whatever? And it's an inspiring kind of story. It's a good story, where, he'd come back and built one of the biggest, if not the biggest hedge fund that there is, managing like 150 billion from basically being broke. He said I was the only employee left. So it was a nice story. All right. Crude oil kind of holding up here. See what it does. Silver just breaking down at the bottom of the range, started to make the turn. So what we do here, right, thinking because it's at support, right, I'm telling you this, why should I think that this is going to slow in momentum? So this was strong momentum. The first turn, most of the time, doesn't work. That's what creates W patterns and sometimes head and shoulders bottoms. But you see the distance here so far is slowing down. We don't have a green bar yet. But I think that because of the fact that it's at this price support. So now to see if we get if this turns into a green bar or tomorrow, this could be an initial buying opportunity for silver, since it's at the bottom of the range, but we wanted some proof that it's actually going to make a turn. With that, and gold. This has been showing some relative strength. It's at what we call minor support. We'll see if it can make a turn. I guess the dollar is down a little bit. It's just been on a tear. You can see, still strong. The 5-year still up at the highs. And, we have different scenarios. And, one of the scenarios was started 2 weeks ago was, well, for me anyway, what I was talking about was that the 10-year would get up here. And it's getting there. It just didn't get there fast enough because I was wanting the markets to drop last week, but it was Fed day and all of that. But anyway, seems like we're getting it. And with the 10-year popping up above here, what I said was that should fuel the bearishness and get the market to drop, but interest rates just getting beyond what the majority's beliefs were, at one time, if it gets above 2, that'll be really bad. Well, it got to 2.2, 2.4, 2.6. Well, at 3, how bad is that? Well, what do you think at 3.4? And that could be one of the motivations to really get sellers to hit the bid. And these hedge funds that have been One of my comments was they've been trained like Pavlov's dogs to buy the dip. And so they've been continuing to do that. Is that a quote from our president of the day, George? Oh, no, that was Powell. The economy is very strong. He doesn't see anything wrong. Well, I think he's going to, I don't know if they'll ever change their tune. They tend to be like the broken clock, but at some point, the market is going to shake his confidence like it did about inflation. So, and what else? Transports, started to join the bearish party last week. Keep an eye if they break down and close down below 14,000. So, if they break down, the Dow breaks down. A comment of mine a couple of weeks ago was, if these things broke down, the media starts talking about Dow theory bear market. The S&Ps will be down 20%, and bearishness will go off the chart, and we'll get a tradable blow. So let's see if this week is going to produce all of that. And day by day, let's see what today brings. To you, Dan.
Good morning. Happy Monday. Yeah, it's when I saw the big gap, the first thing I do is mark it on the daily chart. And the spider's gapping down here it's really not huge. And so I want the scenario of pain. So 405.50, look, it's just right here. So even though it's a big number, down however many points it is, it's to the bottom of the range. You heard Greg, we big old void here, we're bearish. I gave you the numbers, the interactive broker guy, CEO. I like him. He's a smart guy. He's been around forever. He wants 350 to 360, and I'd say 350 to 370. But yeah, look at that. He must be a technician too. That's right at this 180 reversal right here. That would be a marvelous target. So anyway, the point I was also getting at is that I was hoping for more pain. I was hoping for a big old gap down, and then 1 hour sell off or 30-minute, and then that would set up 0 DTE put spreads. Still just trading short-term balances, but longer term we're bearish. All right, we have almost a record number low open positions, which is good. we did a FedEx put spread into the close on the 197s, so gapping down a little bit here, but we have ours is way down here, and then we have CCL short. We're in trail mode, and Shack short. Actually holding up pretty well here. I was hoping for a bigger gap down, and so that's it. Bitcoin getting smashed over the weekend. I think trades 24 hours, like a 32 and change. Now I told Greg pre-market, I'm like, oh, where's this Scaramucci dude who has such an incredible self-dealing bias that he's such an evangelist of Bitcoin. Every time he gets on the CNBC, all he does is say just, buy, because that's his view. And I'm like, well, where is he today? Is he still singing that tune? But so BITO here, the Bitcoin stock's getting killed. This is a ETF. But look at that. That was a bear 1, 2, 3. And that looks horrible. Coin, the exchange looks horrible. All-time lows. Mister. I don't keep losing my pre-market data. This thing just keeps jumping around. All right, 268, but I can't do anything with that. But they look horrible. Look at the month. The monthly was a 1, 2, 3. Remember Riot, Mara. I mean, they all look horrible. Not many earnings here, but let me see what I got going on over here. This was a big gap. It's spotty. No volume. BNTX, I think, had earnings stabilizing. You know, anything green is strong. My Dow 30, I don't see a single one. Uber in the news, and they were in Barron's too, is I think trying to be a leader and I don't know, EVs or whatever it was, but look at that ugly, controlled channel downtrends. Lower highs, lower lows. That just looks horrible. Also, they came out and said they're going to try to cut costs. And this labor inflation is really hurting a lot of people. A buddy of mine owns a pool construction company, and he called. He said he was working yesterday. He said he can't get anybody to work anymore. And I'm like, yep, I hear that every single day. I'm fast short, gapping at 81.50. 30-minute low. A couple of earnings here. Tyson 92. There you go. I mean, of the slop of the slop, maybe 30-minute high. Tyson. We actually have Kroger as a short, and with this gap, I sent out an alert saying we have to cancel. Well, we don't have to do anything, but I said just cancel every single trade idea. Meaning don't enter them without my new assessment. But we have longs and shorts. I mean, the longs would only trigger if they're strong, which I don't see anything long triggering today. Kroger here was a short under this base, and it's gapping down. So that still looks okay. Put that in a window. THS. I don't see anything there. Ride. Look at that. That's an EV thing. That looks like it's going to zero. RCM, nasty downtrend. Remember when we were standing together Friday afternoon? So many things just devastated. A Mac. No pattern. I mean, look at TUP. Look at this thing. $21. Because this thing got cut in half in less than a month. Piton. Look at Pelletier here getting cracked pre-market. And Kramer, look at this, all-time lows, Pelletier. Look at that, IPO up to $40, the excitement. Kramer was actually made a comment of that. He said, a lot of companies are starting to run out of cash. And he said the bottom 1,000 of the Russell 2000, he said are in horrible financial shape. And I'm no fundamentalist, but I'll take his word for it. I mean, we said that was a nasty, nasty crack, breakout failure on the monthly. Yeah, Greg, I wish we course shorted this on this day. Then, even the next day, stop high. That would have been a beautiful entry. We did buy puts in the spiders. I remember that very clearly. All right, costs. If it can get over Thursday's high, then I like it. I don't think it will, but actually, I'm going to set an alarm there. Costs. I'm just going to eyeball 742. If it gets up there, that'll be amazing relative strength, daily, weekly, monthly, or look good in this, particularly in this market. 742, all the fangs, ugly gaps, but every single fang is popping here right now in the last few minutes. But I know the daily charts on all of them look horrible. 3150. Actually, 30-minute high. 30-minute high, that looks pretty good in a weak market. Alpha November had earnings. So I don't see a gap. Wow. Friday's high. The red bar ignored by setup. Relative strength gapping up 153. It's light volume, but that's worthy of putting in a chart. VRTV. That's strong. Pelletier, we saw, poor thing is having some problems. Light volume, message, downtrend. I don't see a gap. Jill, same. Duke. Now, if it can now reverse the gap down and take out Friday's high, then that would be a put spread idea. Cody's a mess. BTAI looks horrible. 30-minute low. Riven, oh, Ford. Ford owns 110 million shares of this. And they came out and said they're going to dump 8 million shares after the lockup period. So that's not helping that. That's at all-time lows. Another EV stock in pain. And these were a couple on our short watch list. Roku, Spot. Greg, actually, we gave these under Friday's low, and they're actually not gapping too much under it. So we got to decide whether we still want to short 5-minute lows or not. So I could use your input on that. See, Dell is down too much, so I don't like that one, but Spot, I think, still 5-minute high maybe, or low rather. Wow, Clorox alarm went off. That was a long, wow.